the easiest way to lose everything you have as far as bankroll, losing your entire investment in day trading, is to do random trading. You know, that's when you just look for anything that goes up. Yeah. You can be guaranteed that you're gonna lose everything, unless you have such a huge bank. Like you have millions, where losing 200 or 2,000 makes no difference. But in the long run, it's going to make a difference, right? And then you could get lucky and make money on those random trades also. So it's possible to survive, but it's going to be an insane ride, So this discussion is based on intense studying of the trades that you want to jump on. Okay? And the more research that we do on a trade, the better chances of knowing how the trade behaves. Charts are really helpful. Studying the shares, the ups and downs of the share, and it will tell us basically how these institutions are buying it and how they're buying and selling patterns. So that's where we got to spend all of our time. If we know that and we have good history, then we can kind of predict, if the stock drops, would it be wise to sell it, or is that something normal? And because maybe this starts at the beginning, when the market starts in the morning, maybe they start selling, and then other institutions start buying, so it goes up. So we have at least a history of this. Okay, it's not a guarantee. Nothing's guaranteed, but it certainly is something that it's better than just random gambling on the stock. It's going to beat that, because chances are that we're going to make a profit based on our research, a lot more than losing. So we have to look at the winning percentages versus losing percentages. And if we're just doing random, the chances are really low. And after spending intense studying and research, we will see that each stock has a ups and downs pattern. Just that the question is does somebody have the time to do this? Well, it's your money, and so the best thing you do, best advice is don't trade. Stop trading and put all the time into researching these trades. It's the same with the person that goes to a casino. They've got all the training, just like a day trader goes through a training program. They learn all the software, they learn all the how to watch the market, what things to look for. It's the same with a advantage player in a casino. They go through 6 months of training. Sometimes it takes a year. It is not wise to start playing. And it's best to just practice and get so good at this that you can do it in your sleep. And even then, there are certain skills in the casino that require us to just go there and just watch. Just sit there and watch. Don't play anything. Takes a lot of trips to the casino, and it's the same with the stock market. Most invest this type of investment types of investments. There's something, you know, where we just can't wait to jump in there and make money, and that's also how we lose a lot of money, because we just hasty decisions without research, you know. So that's the first thing we need to overcome, that urge to just jump in. You know, that's the first habit we have to learn. We have to learn how to just sit there and watch the market and do no trading. Just watch it, a few days in a row, and learn the habit of not placing your bet. Okay? This is the person that has a gambling addiction. That's their problem. They can't go to a casino and just sit there and just watch. Or they can't stop themselves from going to a casino. If they can find money, they're going to go to a casino and gamble, Day trader could be an addiction too. If you're unable to just sit there and watch and do study and not place any kind of a trades, then you may have an addiction, Because addiction is not to the game. Addiction is to trying to make money. It's really a money addiction. It's not gambling. It's the person is addicted to trying to make money this way, So it doesn't matter if it's a casino, if it's a stock market, even real estate could be that way, sometimes. And I know I personally, for a while, I was flipping properties, and then all of a sudden I would lose, and I think I was just getting to that greed, of trying to make all these big bucks, and then a couple of deals I ended up losing, and I realized, and I couldn't wait to buy more. Now, why would you want to buy more when you just lost, $7,000? Doesn't make sense, does it? So that could be an addiction. So I realized that I stopped. I stopped completely for, I think, 6 months or so. And I wanted to see if I have that urge to just go in. I think what it is we feel like a big shot. Wow, here's a few $1,000 here. We feel like we're multimillionaires or something. And that could has to do with ego. It has so many different aspects. So that could be the reason for this addiction. I'm not a psychologist, but I think it adds to the problem if we feel like, we feel like we're rich or something. If we feel like we're a big shot, just throwing money around, and that's a problem, So that has to stop. That urge has to stop first, And regardless of what type of investment we're involved with. And the second thing we have to understand that investing is not necessarily going to be fun. Most 99% of us never had a job that we just loved. That 1% that love their jobs, they're just lucky. And it's the same with investing, whether you go to a casino, whether you into stock trades or real estate or any other kind of investment. It's not going to be fun. Okay? So there's going to be a lot of stress involved, anxiety, because you're in the process. Losing is part of the business. There's no such a thing. It's a coin toss. If you're wanting heads every time, good luck. It's never going to happen because you're going to get some tails. So tails, let's say, is the losses. That's part of the toss. You have to get used to that. So, and while we enjoy the winnings, we don't seem to remember it that well. The next day, we forget about that winning. But when we lose money, we remember it for some reason. It's a torture. So we have to get over that. That torturous losses. And we got to control our behavior, daily behavior. We can't let the losses destroy us. and we can't let the winning just get us so excited that we start to behave strangely, and get into greed, because it can lead to greed, right? So, and best thing cure for all of this is just stop. Anytime we feel that there's something abnormal going on, we need to stop everything and examine ourselves. And record keeping is really the key. Just an Excel sheet that shows every single time that we invested in something and what happened to that. And maybe detailed notes are extremely important, because when things are going bad, you're starting to lose, you can stop, you can go back to these records and try to find out if you're doing something new, you're testing something, whatever, or if you're making mistakes. How else are you going to find out? And don't get me wrong, I'm guilty, everybody's guilty of this. When I first started I've done them all. I've done flipped properties, I've done day trade, and also as an advantage player in a casino. And for some reason, every time I start, I will put so many hours into it that I just don't have the time for record keeping. And that is the biggest mistake, because sometimes you get that beginner's luck. You start making a ton of money. You say, why would I want to keep records? I'm making a fortune. And then the reality hits. In all investments, there's losses involved. And then when you start losing money, you don't know why, because you don't have any records, right? So, for this video is based on the most important part of this video is that you have selected certain number of stocks that you trade, and you're not doing random, so the pattern of these stocks, because you've put 500 or 1,000 hours into it, and this company inside out. You kind of tell the institutions that are trading it how many they're buying, how many they're selling. This information is not easy to get. I did a computer science program at a major university, and really all they teach you more than anything else is how to find, get information on the internet. So you have to be able to, but if you go through a training program, hopefully they teach you how to get this information. And you get better and better at it. At first, you just run into, you click a link on a search and it tells you nothing. And you go through a lot of links and tell you nothing. But after a while, you get better and better at keywords. How to find, like, the company, like, how many trades have been done, who, maybe even you can figure out, you can estimate the number of shares that each institution may be buying based on a pattern. I realize this is like really crazy, but that's what we had to do, because when I did it, it was when the tech stocks were just jumping, and we didn't have any software. We just, we did our best, basically. And internet was not the way it is now. This is years ago. So this whole video is based on a person that has done their homework, and they only trade certain stocks. They've chosen a series of maybe 10, 20 stocks, and that's all they trade. They don't just go random, because this video is going to really throw you off if you use it as a random method of buying and selling shares, or any other type of investment, including casino. Okay, so now let's move on to this thing. Similarities between day trading, stock trading, and advantage players. Okay, these two are very much alike. The type of work that's involved. In fact, some of the top mathematicians that started doing card counting, they started with card counting, and then moved on to day trading and make fortunes. and vice versa. Some of them started day trading, and they realized the basically the coin toss that we talk about and potential, and they started playing in casinos. And so while they're very similar, the initial investment may be different, but they work the same way. And if we understand both skills, then it's going to be extremely helpful. Okay, so first thing to understand is that they both require adequate bankroll. So if you're a day trader and you're going in there with just 2,000, you can't expect much. You're probably going to lose that 2,000. Okay, and it's the same with advantage player in a casino, because you just don't have enough to make adequate amount to increase your bankroll to a certain level where your losses don't matter anymore, because losses are part of the business. You can't just say, well, I want to go and I want to go to the casino every day and make $400 and I'm going to be happy. Well, again, that's like a toss coin. If you haven't been following our program, when you toss a coin, you might get heads, and you say, okay, so I want heads every time. Good luck. And you might get 6 different tosses, you might get heads. But then what are you going to do when the tails start happening, okay? And it's the same thing if you're gambling with a friend. It's just, you're betting on tails and they're betting on heads, and at some point you might even break even, but there's going to be losses and there's going to be profits during that time. It's the same exact thing with day trading and also with advantage player in a casino. Okay? And then you're wondering, how could there be a coin toss with day trading? Well, your coin toss with day trading is that what happens, you jump on a stock, right? Because usually you're going to be doing penny stocks, right? And they're going to be, how much? $1 to $10, You're not going to be day trading Microsoft. That doesn't make much sense, because it just doesn't, the volatility isn't there so you can pay the commission and show a profit, right? So you're going to be dealing with penny stocks, right? And the thing with penny stocks is that they're volatile because institutions are on them, hedge funds, all these people. And you're sort of competing with them in a sense, okay? And what they do is they suddenly buy 2 million shares. And guess what's going to happen? You're going to see the stock going up, right? And another one, or the same, could be selling it. And you have to, and that's going to depend on if you're day trading at home, and your internet speed could make a huge difference. If you're clicking the sell button and it's not going through instantaneously, you might lose $100 waiting for the internet connection. So you need some amazing speed, and you need a dedicated line for that, because that's what they have. These institutions, when they click sell, it sells that, that second, it sells it. And if there's a lag in your internet connection, you could lose 50 or 100 or 200, even more. So, but what happens during this time, you see the stock going up, right? Because somebody just ordered 1 or 2 million shares, right? And you see the stock going up, right? So as the stock's going up, another hedge fund, let's say their stock is $10, right? And they buy 1 million shares, okay? And it's $11. Another hedge fund might have bought that same stock for 9. They might have 1,000,000 shares. So if they so it went from 9 to 11 for them, and they have 1,000,000, just imagine what kind of money they're gonna make, you know. So bang, they're gonna sell it, and when they sell it, guess what? There's no the demand just went down, and the stock could go down. So it goes up, it goes down, it goes up, and then maybe somebody else buys, it goes down, and you don't know what to do because you have no idea, and nobody really knows what to do because things are happening at the speed of sound, and next thing you know, it just takes a nosedive. Everybody starts selling, and you just lost all that money that you put into it. Okay, so that's the coin toss. You know, it's the same thing. As far as you're concerned, you're not an institution. You know, and you don't have enough buying power to control the market. You know, if you're buying 1,000 shares or even 10,000 shares, that's not going to make much difference. Versus these institutions that buy 1,000,000 and 10,000,000 shares at a time, that is going to make a huge difference in price increase and decrease. So they could actually they have other ways where they can drive up the price of the stock. So in a sense, it's out of your control, right? There's nothing you can do about this. So it's the same thing. It's a coin toss, you know. And the same thing if you're playing card counting, you know, blackjack game. You know, you get to a point where your count is positive. You know, when it's positive, what's happening? You got nothing but tens, you know, and aces coming out. And that's when you start investing. So instead of paying $10, you know, you're going to pay probably 3 hands of table max, $500 each, right? Because every time now, the dealer is going to keep busting. It doesn't matter what you get, you know. The dealer is going to keep busting because unless, you know, they get an ace, they get it one. But a lot of times, they get a 10, and then the next card might be a 5 or 6, and they have to hit, and that card is a 10, so they bust, and you win money half the time from busting, and then you get blackjacks and you get 20s too, you know. So you make it $1,500 per round, you know. But that's if the coin again is tails on your side. What could happen, unfortunately, is the cards may not come out correctly. Okay? And it doesn't mean they're all 10s, right? It's just they're mostly 10s and 9s and aces. But it just could be that the dealer could get a 60 and draws a card, and guess what it is? It's a 5. Or a dealer could have an ace and he could have a blackjack, or he could have a 9, you know, and you got 19. So these kind of things happen, okay? And you just lost $1,500. So, and that's what we call a coin toss, because there's going to be variance where cards don't come out right, and you're doing everything 100% correctly, just like your day trading. You know, to how you've been trained. You know, when I did it years ago. This was when the tech stocks were just cooking, and we made fortunes. It wasn't like now. I mean, things were just out of hand. You could make $2,000, $3,000, $4,000, $5,000 a day on a small budget. You know, and the way we did it, we didn't have all the software programs that are available now. So we eyeballed everything. We would have 2 or 3 screens, and we would sit there and see what's jumping. You know, we start like in my time zone, I had to start at 4 in the morning. You know, because when the market opens, that's when we did it. A lot of activity then, and then it would just level off, right? So I'd start at 4 in the morning, and I'd be watching any movements, right? And as soon as I see some movement, I jump on it, you know. And you know, let's say I buy $10,000 worth, and if it went up by, even if I made $500, I'd sell it because the commission was small. So I made $400 something on it, you know. We didn't have all this software nowadays that are available. And so when it comes to making a decision to buy, even with all the software in the world, you could do everything correctly and still lose on the stock. Why? Well, because it's just what I explained is a whole bunch of institutions jump in there and start buying and selling like crazy, and the stock may not go up enough for you to worth selling it, right? Let's say you bought it at 10 and you bought 1,000 shares and it goes up by a penny. Well, you can't even pay a commission if you sell it. So you've done everything correctly, however you're trained. You bought it, but it's just a coin toss situation where these institutions were buying and selling like crazy, and the stock doesn't go up enough for you to sell and make a profit. So you hang on to it, and next you know it starts dropping. Okay, so that's the same thing as a coin toss in a blackjack game. The same thing, and it takes a long time to get used to this volatility and to know what to do in these cases. And it's all the statistics. If you've studied math, in the past. But it's an overall investment. I guess in the day trading they call it portfolio. So you have to learn when to quit at a profit. You have to learn how to quit when you break even, and you have to learn how to quit when you lose. Because if you're losing, you have to make a decision. You got to cut your losses. Maybe if you've lost $60, that's nothing. Sell it, get rid of it. But you have to understand the stock, and you have to understand everything. You need training. Well, after your training, sometimes you have to cut your losses and walk away with $60 loss, and then make money on the next trade. And it's the same thing with the casino visit. You have to learn that some days are not going to be profitable. You're going to break even or lose, and because there's always going to be tomorrow, right? So let's compare a new card counter and a new day trader. Let's go through what happens to them. Okay, they're both sitting down and they're doing. Let's say they're doing everything perfectly, right? And they suddenly realize an opportunity. For the card counter, it's when the count is positive. Okay? For day trader, is when their software they're using, whatever, gives them an indication that this thing's going to go up. However you do it, okay, it doesn't matter. But in the training they teach you when to jump on a stock, right? And these two people, they're jumping on this train, right? And the card counter has a little bit of bad luck. He went from $10 single bet, he went to 3 bits of $500 each, and he loses he has, let's say, like a 15 on his first bit, and he draws a card and it's a 10, so he just lost. Okay, $500. Okay, let's compare that to a day trader. And day trader, this is lesson number 1. You can't buy more than one stock at a time, obviously. That's just a suicide. You have to, how can you keep track of it? And we actually did it, to be honest, because there was just not enough trades at opening for us to just buy one thing, Every day, the way it was working back then, we'd have one stock, and we could only make about $100, after commissions and everything. So we bought 2 or 3 or 4 stocks. Believe it or not, it's just a form of insanity, and we had to keep track of all these. um, and you may be required to do this. You know, if you're trying to make a living at it, which I was, you can't live on $100, or maybe you can. So you're gonna buy 3 or 4 stocks, just like a card counter is gonna be 3 different spots of $500 each. So he just busted the first one, right? He drew a card at 50 and he busted. So now he's got to think, okay, my second hand is also bad. He's got a 12 and the dealer's got an ace. And it's almost impossible to bust with an ace. Hardly, 1% chance. So what is he gonna do? And it's the same thing as a day trader. Okay, you took one trade, okay, as it didn't do too well, okay, and you had to cut it, because it wasn't moving. If anything, it was going down, and there was no indication that it was going to go back up. So you cut your losses, right? You sold it, and you lost, say, like $80. Okay, so these two people are in the same position. Now back to the blackjack player. He's got a 12. The dealer has an ace, right? Oh boy, he already lost 500. Can he afford to lose another 500? Obviously not. How can you? And the count is positive. So if it's a 12, to a certain levels you can draw on a 12. But there's no guarantee that he's going to get a 8 or a 9. He could get a 10, right? Because the count's positive. The only things coming out now are 10s and 9s and aces, So that's a major decision to make, And the same with the day trader. Lost money on one trade, and the second trade is looking worse. The first trade dropped and he lost 80, but the second trade has dropped more. So now he's already lost $200. So what is the day trader thinking? He says, I can't afford this, man. I just lost $80 and another 200. Someone lost $280 already. Just the start of the market. Well, if there are no indications, just think about it. What are the chances? Now that stock could go up. Yeah, sure, it could go up, but it could go down too, right? So the way we did it is, as soon as the stock went into a loss, we sold it, and if it went back up, we could buy it again, maybe. So yeah, the day trader now has lost $280. Okay, but it's better than losing $2,000, right? Because there will be a tomorrow, and you could gain that back. We have to minimize our losses. Okay, so back to the blackjack player. He's in the same boat. He's already lost $500 on one hand. He's looking at losing another 500 in the second hand. Okay, and the count says that he has to hit. Unfortunately, so he could say, "Well, I'm not going to follow because these systems, counting systems, they run like 100 million hands of blackjack on a computer, and the computer result says that." If the count is at a certain level, you got to hit that 12. You can't sit on it. All right. So the count says hit. And what should he do? Well, he could be like that day trader. He could say, "Well, I've already lost $200 or $80 and 200 here. I'm not going to sell." Okay, where maybe you're trained to sell it, and you go against your training. He said, no, I'm going to keep it. And man, he keeps it, and he keeps going down. He keeps going down. Now instead of 280, he's lost 380. He's lost 480, 500. You know the game. This happened to you, right? So it's the same with the blackjack player. Okay? He says the rules say you have to hit that 12. He hits the 12, okay, and he loses. He gets a 10. He loses that hand. So now he's lost $1,000. And the third one is the same. He loses that one too. He gets maybe 18, and the dealer gets 20. So this is a bad coin toss. Okay, this happens, but not all the time. Majority of the time, when he goes and puts $500 bets on 3 different hands, he probably gets a blackjack on one, so he makes, $750 on that one. Then he wins maybe the second one and probably the third one, So it makes 500, 500, and 750. So he makes $1,750 in 2 minutes. Okay. And it's the same with the day trade. Buy 4 stocks like we had to, and I lost money on 4 many times. But I learned the hard way. It was like, back then it was a little different than now. There was a period of time, again, based on your training. Whatever training says, I would follow it because, it's the same with the, hopefully you have good training. It's the same with card counting. The computer results are always correct. Now, let's go back to that 12. Hitting that 12 versus a dealer. Maybe the dealer has ace or something. Okay, so the computer results say you got to hit it, right? When the count is positive, you're going to bust. Or when the computer says hit a 16 versus a 10, you're going to bust. But it doesn't matter because you're in this business for a long run. You're not just doing one hand, right? You're going to be doing this every day. So the computer results say that if you keep hitting that 12, okay, when you add it up, in the long run, you will win. Then standing on 12. It's kind of crazy to stand on 12, but believe it or not, people do it. I'm sorry. No, 12, you could stand on 12 depending on the count. There are certain counts where they say you got to stand on 12. So you got to go with the training or whatever proven methods. These mathematicians sit there and figure these things out. And they make charts, and hopefully maybe you have, during your training, they go over these charts with you. And then they say, well, based on the last so many years of trading, it looks like these type of stocks, when they drop, they never go back up. Some crazy thing like that. That might not be the case. There may not be a training like that. But we knew certain trades because we did them all the time. And we knew that once they dropped, they never went back up. So once it dropped, we sold it. Just like the person playing the blackjack, they know they shouldn't be hitting that 12, but they hit it because, the statistics will catch up, the numbers will catch up, So there are a lot of similarities, but overall, each trade and each play is not going to matter. It's what you do as a whole, Losing one hand, big deal. Who cares, It's the way that you do this correctly, day after day after day. That's gonna be the profit. Not making money on one deal. That's just the wrong way to look at this. So it's the same way as far as the strategies are very similar. I would stress on the bankroll. you need a gigantic bankroll. And of course, I would borrow money, from your bank, from whatever you can. I would borrow money, and I would keep my savings, and I wouldn't touch it, because you can always make payments on borrowed money. But once you lose your bankroll, you got no money coming in. So the larger amount you put into day trading, the better chances, because you're able to spread the money more. But if you're just going in with $5,000 and you're buying $5,000 or $10,000 worth of stocks, then you're depending on that one stock. That's not going to work, because you probably lose on it, and you lose on the next one. But if you have 50,000 or more, and you buy 5, spread your money over 5 of them, and it's the same thing as blackjack. When the count is positive, you want to have 3 hands. You want to play 3 hands, because if one of them loses, who cares? Because right next to that hand, you probably hit blackjack, so that makes up for that hand plus profit. And then you probably hit the 3rd hand, probably make money on that. So you need to spread the money. So bankroll is everything, really, in this business. The more money you have, more chances of profit, obviously. But there are a lot of similarities, and there's a lot to cover in this subject. So I think this is enough for one video. Thank you for watching. Please like and subscribe. Thank you.